Hey, welcome back. It is Saturday here in Florida, and we're experiencing a bit of a cold chill. Not as bad as up north, so I'm not going to even try to make that claim or pretend that it's really that cold. It's low 50s here. But I wanted to jump on for just a couple of minutes and just talk about what happened in the market this past week. So for those who are not aware, there was a market adjustment that happened this week. And frankly, it had to do with the Fed chairman throwing everyone into sort of a state of confusion, instability, whatever. So everyone was going into Wednesday, the rate decision, the Fed rate decision, pretty much knowing that the Fed was going to cut the rates by 0.25%. So that was no big surprise, and that didn't shock the market. Nothing happened with that. Everything was just going along as usual. And in fact, the markets were up, which was nice because I think it was at that point 8 straight days of losses in the market. So it was nice to have an up day. And then Jerome Powell comes out at 2:30 Eastern and starts talking about how they're watching the labor market and they're watching this and they're watching that. And because they have concerns about the direction, they changed the what people had thought was going to be pretty much 4 rate cuts next year. They lowered it to 2 rate cuts next year. So in and of itself, I mean, that wasn't a big deal. What was a big deal was they were sending mixed messages. On one hand, they cut the rates, but on the other hand, they were saying, hey, we're kind of concerned, so we're not going to be cutting very often next year. And so if you look at the chart of the markets, all of them, the Dow, the Russell, the NASDAQ, the S&P, all of them at 2:30 just went, poof! It just tanked. I think I heard somewhere that it was the worst one-day loss for one of the markets, maybe the Dow, I don't remember, since 2001, which puts it right up there with the dot-com bust, bubble bursting. And then another market, it was the worst day since 1975. So, why I'm bringing that up? If you are new to investing, or if you just, if you're kind of a worrier, that probably really shook you. I will tell you that, I mean, I stopped looking, but of course I went in after the whole thing was done and took a look, and yeah, we'd lost like over 3%. So we're back down under my milestone, which was the 300,000. But the more I looked at it and I listened to a few analyses after the fact of, everyone was pretty mad at Jerome Powell. It's like, dude, if you're worried, don't cut, but don't throw the market into a tizzy like that. But the way I look at it is that it was pretty much just a reaction. It wasn't based on, solid market metrics. It was just purely a reaction to what he said. It was a reaction to, being thrown into instability. And, the market doesn't do well when it's almost like a teenage person, really. It doesn't do well when, there's instability. It just doesn't. So anyway, in saying that, already on Thursday it continued, went down some more, and I'm watching it go, and I'm just like, okay, all right, I think we're somewhere around 4% now that we've lost. And so on Friday it started to come back, and we got about 1.5% back of what we had lost. But the good thing is, I mean, I had dividends come in on Friday. I had mutual funds come in on Friday, so we were up. It was $1,700 worth of mutual fund capital gains and dividends. So, things just keep trucking, and you just leave stuff where, well, I did treat it as a buying opportunity, so there's that. I did buy a couple more funds that were tied to indices since the indices were down so far. I also bought some SCHD, which is a very stable, steady dividend stock. It's not a super high flyer. It's very steady. I bought some JEPQ. I mean, I basically went on a buying tear. I had a good time. It was like, you know, the day after Christmas shopping. You go out there and you're like, woohoo, everything's on sale. So that's the way that I treated it. Was a big buying opportunity. And so right as Friday came around and all my capital gains were registering and the dividends were coming in, the market started going back up again. And I think yesterday the S&P went up, I think it was 1.7%. I know we saw a bit. You know, it's going to take us a while to come back from that adjustment, but it wasn't a crash. It was an adjustment. Some things really went on sale, and honestly, people were snapping them up. So, you know, when stuff like this happens, just remember, the market is cyclical. It's cyclical. If you look at a history of it year after year after year, it goes up far more often than it goes down. It just does. That's why the trend goes like that. So, you know, just know that for you to have ups, you have to have downs. There has to be downs. It's just like for you to understand what happy is, you have to know what sad is. You wouldn't have a comparison. But so there's going to be ups, there's going to be downs, and just stay the course. Just stay the course. Just keep investing. Just buy when it's a good price. You know, when you see something that's on sale, buy it. And, you know, just keep your eyes on the prize. Keep your eyes on your goals. And just keep plodding. Just keep walking. Just keep walking. Just keep walking. And then sooner or later, it pays off. You've reached your goal. And in my case, my goal is retiring and traveling the world with my husband and experiencing other cultures and eating other foods and meeting people that are different than we are and making new friends and all the good stuff. That's my goal. So I'm just going to keep my eyes on the prize and go forward. And I'm not going to let the market give me any sort of anxiety. I'm just going to ride it out. And I'm going to keep cash on hand at all times so that I can buy when these things happen. So anyway, happy Saturday. Stay warm, especially everybody in the north. And God bless.